better word, is good. Read it right. Read works.
Hello everyone and welcome to episode 26 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out we had another downswing, ended at 56.4 trillion. And I think it's important to point out that that number is really kind of meaningless right now. The reason why it's so low is because the prime rate is extremely high. And as a result, all of our stock prices are low because all stock prices are heavily influenced by the current interest rate. But all of our companies are in solid financial condition and we have them heavily invested in either their industries or in commodities or the index or stock options. And basically, as long as the prime rate calms down, or as soon as it does and our GDP growth goes above zero, we should climb back up into a more, what I would call a normal pattern. And all of our options will grow in value. All of our commodities, if they go up in value, the net worth on our companies will grow. We are basically in a perfect position. It's just that the interest rate's not cooperating, and right now all the commodities are basically stagnant. So all the investment that we've done, we did in the last 2 or 3 episodes. We basically have not made any money off of any of them yet. For instance, spot crude, we've got trillions of dollars invested in spot crude, and yet the price has not gone up. I think we bought most of it between $55 a barrel and $65 a barrel. And so if that price goes up, we'll be in great shape. If the interest rate comes down, we'll be in great shape. If wheat and corn go up, we'll be in great shape. If the index goes up, we'll be in great shape. So basically, we're poised to make a lot of money, and we just have to hang on and manage our companies until the conditions turn around. Okay, so and also we've got a lot of swaps. Got a lot of swaps that are going to kick in. They're going to begin. We're not going to see the actual profit until the next episode probably, because those earnings will be declared on June 30th. But we are in a good position on those as well. We have both short and long swaps, so no matter what the interest rate does, we will make money on those. It's just a question of how much. All right, so what we're going to be doing today is we're going to finish up the management on all these little guys. Most of these are at the bank. They are bankrupt companies that went bankrupt, and we inherited them at the bank. We've also got some swaps at these ones that we've already worked because we merged with other companies that had swaps, so we inherited those and we need to cancel them before they start. So that's the first thing that I'm going to do. Then we're also going to look at the all the options that these various companies have. We're going to make sure that we do our best to cash those in when they're at their peak, and we haven't looked at them in quite a while, so it's time to start taking a look at those and make sure that we aren't losing tons and tons of money. I also wanted to show you, let's do the tax basis info. Show you where I stand on my short positions. I sold short a bunch of the integrated oil companies, and we were losing money on them across the board pretty much. But now we're showing about a $95 billion profit. Most of that is off of Petróleo Brasileiro. We're losing money on Conoco. We're losing money on Total. We're earning a little bit on Exxon and Texaco. So most of the profit is off of PBR. And it's going to go down some more, but we've got to look at the industry, and we'll do that when we get done looking at all the options, or as we're looking at all the options. Okay, so basically, I have updated my spreadsheet. And we had 2 other companies that were at their sale price, which are no longer at their sale price. They've dropped in value. Those were Dayton Hudson, and I forget what the other one was. But I think those will go back up. It's just a matter of time. So what we're going to do is we're going to begin with Burlington Resources here. And actually, let's clear this out and fill it back up. And let's go to Burlington Resources. Honeywell has now filed their lawsuit against GE. GE has a 52% market share. We've got them growing at -10. We're just going to fight that lawsuit and hope to win it. So we're just going to terminate all the contracts that these companies have. So Nomura is next, and I'm just going to fast forward and cancel all of these, and then I'll be back. So the next thing we need to do is we need to look at all of these options. Now most of them are going to be on oil companies, but there's probably going to be some others that we've inherited along the way that we need to look at. So this one was Total Petroleum, and looks like we're making money on it. This is a put options. This is a put option, and we have sold, I guess. It's negative, so we want this current value to approach 0, so we're making 200 million on it right now. So let's go over and take a look at the integrated oil industry. We're still negative, he's still negative. So Exxon and Total are still making some money. So we should probably buy some more assets here. And make these profits go away. Let's see what kind of money Burlington has. Not much of any. Let's go and see what Total's projection is. 23 cents, which is way down. So with it being down like that, his stock price should fall, because he's selling at a heck of a premium right now. I'd like to see him go into more debt. What are his... He's making money on oil and on the stock index. So if the oil price climbs or the stock index climbs, he'll lose money on those. And he won't cover them until he hits a BB credit rating. And he's got plenty of credit, so I guess we just need to wait. He's got options that he's losing money on, making money on, losing, and losing. No, making money. And overall, he's down about 2 billion. That's on Pioneer. So I think as far as the oil companies go, we're going to hang on to these a little longer. PBR we could cover. Anything with regard to PBR we can cover, because he's not going to fall any further than this. But on the others, we need to hang on to them. I think that's what our plan is going to be, at least for right now. Okay, so Cabot has options on Total. So we're going to hang on to those. Tochu, I think all he has options on are HeartMax. And those options are down, and they expire in December. So we want those to climb between now and December. So HeartMax is in semiconductor industry. He's got a low return right now and a low stock price. But we just put him in here in the last episode or two, I forget if we did it last episode or the one before. His income is down, which is too bad. Now his net worth is up. His stock price is down, and his earnings are down too, which is not helping. We need that stuff to climb. We could buy some more oil now that it's down again if we have anybody with cash that doesn't already own the max. But we don't really. So anyway, so the Itochu's fine on the options. So let's go over to Hagemeyer. Hagemeyer has call options on Itochu, and then we've sold short all of these. So we're making a killing on PBR because we sold it short at 104 and he's all the way down to 35. So that one we can cover and take the profit on it. Exxon, we're making money. Total, we are losing money. But again, all of these we're going to keep because all these are going to fall some more. think any of them are up a whole bunch other than PBR. So let's cover our call options, sell off our call options on PBR. Or I guess these are put options. We're going to sell off our put options on him and keep the rest. It's a $62 billion gain. And let's see what he has in terms of oil. If he doesn't have very much, we'll have him buy some more. He's only got 200,000 units. Let's buy some more with the barrel price down this low. We'll have to borrow to pay our taxes, but when that price goes back up, we're going to make a killing. Okay, so Hagemeyer here, and he's good, and he still has options. So Dayton Hudson is next. Okay, so he's sold short a bunch of the competitors in his industry, and he's losing money on all of them but Kmart. Kmart's the only one he's making any money on, and it's more than double. And these expire in just a couple of months. So the possibility of recovery is really kind of small. Let's take a look at the industry. We're only growing at 1%. The industry's growing at 5%. And these guys are growing pretty fast, but they're not making any money, any headway. That's kind of weird. Look at Walmart. He's rated a strong buy, but his income is down. So, what do we want to do here? Trading at 3 times his price. I think maybe we just want to cover it all. We're going to lose a lot of money doing that, though. What are you going to do? These are call options. So we'll be selling these off. Let's start with Kmart. And just start selling off these options. This price is shooting up. Which is nice, we won't lose as much. Alright, so just Costco now. He's rated to buy too, but his earnings are also down. Traded as high as 139, but now he's on the way back down. He's trading at 3 times his price, 3 times his value, so we'll just sell those off too. Just picked up neck peripherals. Alright, so Dayton Hudson has $60,000 or $60 billion that we can now put into something else. And he's got 240,000 units of oil. We could buy oil or we could buy corn. I think corn we can make more money more quickly. So let's buy as much corn as we can without going into debt. See, on the options, we had losses of 13 billion. So let's put at least 50 billion of this into corn. I'm going to start with 12,000 and see where that gets us. All right, that was 40. So let's buy another 3,000 units. That's 50 billion. And of course the price drops immediately. Okay, well, hey, the prime rate's down. That's good to see. Okay, so this is Dayton Hudson, so let's see. Next up is Hartmax. I think all he has options on are Hagemeyer, so I don't think we'll need to be doing much here. Alright, so he's got shorted positions on Exxon, and we think he's going down. He needs to go down a lot more for us to make some money here. We want him to hit 45 or lower. And these expire in March, in 2 weeks. And he doesn't declare. Let's see. When does Exxon declare again? April. Well, shoot. And he's rated to buy despite his income going down to almost nothing. It's crazy. His income is going down to almost nothing. Why would he be rated to buy? He's making a little money on oil, but not enough to justify. Right, so he's making a little money on those. Losing a lot of money here. Making a little there, losing a little here. 22 cents a share and he's rated to buy. That makes no sense. Okay, well, I think we'll just wait and hope that it goes down some and just let those options get settled. Hopefully this price goes down a little bit and these get settled where we don't lose quite so much. Alright, so we're going to keep all of those. So the next one is Phelps Dodge. And again, it's ExxonMobil. It expires in April. Hopefully when he declares, his stock price will take a drop and we can settle these at a gain rather than a loss. Those are the only ones he has. So we're going to keep that one too. Mallinckrodt has options on somebody. ConocoPhillips, and we're losing money. And they also expire in April. We'll hang on to those two. Hope that his price goes down in April. Sony PlayStation. Got options on Walmart and he's making money on them. So let's cover those. These are all options that he's sold short. Okay, so those we got rid of. Last, I think, is iOmega. And he's got a bunch, and finally we got one that's making money. All right, so let's see. These expire in July. And he's making a lot of money on these. Let's take a look at Toshiba. He's rated to buy. His income is up and supposed to be staying up, which is good. Which is good. Okay, so who else? Seagate. He's a strong sell. Income is way up. Why is he a strong sell? Oh, because of the swaps. Okay, let's cover that one. These are all options, so we just sell them. Okay, taxable gain of 80 million. Alright, so Lexmark. His income is up and staying up. It's trading really high. There's Lexmark right here. Got a high dividend, high growth rate, and high return. At the highest return. He declares on May 31st. These expire in July. If he's ready to buy, I think we should hang on to him. Let's look at HP printers. His income is up but dropping, so let's cover him right away. Taxable gain of 5.3 billion. Okay, let's pay down our loan. We're still growing at a negative 10%. Our stock price is really low. Let's see what we want to do here. We can add their 1.5% to our portfolio. This one's owned, this one's not, this one's owned. Let's buy Psi Systems and merge him in, and then review what we think is going to happen here. If he's already growing at a negative 10, so it shouldn't really matter. Our stock price dropped even further. I wonder if we can buy options on him. 100% owned. He's got 70 billion in options. We're making just a ton of money here. Yeah, 165 now. All right, I want to go ahead and cash these in, and I think we also want to turn around what we're doing here, but we will revisit that when we get down to him. Okay, so what I'm going to do is I'm going to sell off these call options for Toshiba and Lexmark, and we're going to let them sit on the cash for a few days while we finish up. And when we get down to him on the list, we'll probably buy some competitors. It's just phenomenal. Okay, so here we go. We'll have 55 billion left to mess with buying our competitors. Like the index is on the way up. Everything else is about the same except our interest rates coming down. Okay, so let's see. That was I Omega, which is here, so he no longer has any. I don't have any, I don't think. I don't have any either. Okay, so that's all the options taken care of. And we just want to work our stocks while we keep an eye on our commodities. I don't think it's going to be... I think the first ones that we'll be able to cash in are wheat and corn. The rest of these take a little longer. So we're mainly going to be watching wheat and corn. We got the swap for Mallinckrodt already taken care of. So the next one up on the hit parade is Boise Cascade. Income is down slightly. His price is flat, but his earnings are up. We're going down slightly. And we only have an 18% share. We're very capable. We can lower our R&D. We got tax loss carryovers. We're in the building materials industry. And we need to merge with RGC here. Alright, so returns aren't great. What we'll do is we'll buy this one and merge them in. We'll lower R&D to 6%. Give ourselves a 2% dividend and we'll call it done. Earnings at General Electric are down. Of course, we made a profit when you consider the extraordinary dividend, or income, I mean. We'll go back and look at him when his antitrust comes up. Alright, so here on Boise, pay off the loan. That our R&D is 6%. Give ourselves an 82-cent dividend. And I think that's all we want to do for now. These guys don't have a lot of credit. So if this goes back positive, we can start growing. But there's just no demand growth right now, so we'll just hold on. We could increase his dividend since we have so much cash. We're not going to need this much cash when we start buying competitors, I don't think. Let's make our dividend $1.60. I don't know why, but my mouse keeps double clicking when I want it to single click. I may have to go calibrate it. Alright, Del Web's up next. Let's take a look. Our earnings are going down. We have a negative return. We're spending 21% on R&D. He's owned. We can buy him and him. Got a lot of money. And we're very capable. So, let's reduce our R&D down to 6%. Our growth rate is 0. Let's make that 1. And let's give ourselves a 66-cent dividend. Let's buy these other two guys and merge them in, starting with Oakwood Homes. All right, we've reached the first antitrust against General Electric. Honeywell has filed a lawsuit for $25.5 billion, but will settle for $1.2 billion. The plaintiffs allege in its complaint that the defendant and/or related companies conspired to control 52%. Blah blah blah. Am I willing to settle? Now that is a really low offer. And I'm actually tempted to take it, but I think if I hit no, that we're gonna prevail. So I'm gonna hit no and hope that we win the suit. Oh my God! Holy crap, they won 8.5 billion. Well, when I file suit, I don't win those. Why should they win those? Let's go over to GE. No, he's not on our list. Oh, brother. All right, well, 8.5 billion is not a big percentage of our balance sheet, so I guess it doesn't matter. We still have a 52% share. Guess maybe I should have settled for 1.2 billion. I didn't think 52% was a big enough market share to really lose a big one, especially not for an amount more than they sued for. But I don't get I don't often take these suits to court, so I guess maybe my knowledge is a little sparse. Maybe it's a little lacking. But anyway, let's get back to this one. Let's buy Williamette here. Or excuse me, Walter Industries. All right, let's buy back the bonds and pay off the loan. We now have a 36% market share. We're very capable. We've got tax loss carryovers to shelter our income. We're growing at 1%. This guy's growing at 15% because he has lots of credit. But he won't be able to sustain that forever. He's not very big, really. So he's got $5 billion in credit, and his earnings are going down on top of it. Okay, so oil's going up, corn and wheat are going up, and so's the index. I'd buy more of it if we could get counterparties, but we've used them all up. Okay, so management-wise, let's make sure we have our settings right. We could reduce our growth rate if we wanted to, but I want to keep it at 1%, keep the pressure on these guys. I don't want them to be super profitable. Okay, and I think that's all we're going to do there. So Dell Web is done. Next up is Sony PlayStation. Here we are growing. We've got a terrible return, and we're only spending 4% on R&D. Pick up coal, and we might want to get Yamaha too if he drops a little bit more. Now, we only own just over half of Sony PlayStation. He's kind of heavy in debt too. Trading kind of high. 245. Let's see what our tax basis is for him. If we sold him now, we would take a loss. His target price is 106, which is kind of high. This is what I wanted to look at. Well, I don't want to buy the outstanding stock when he's trading this high. Unless we just buy Kohl's, 100% of Kohl's, give him the money and then merge him to increase our percentage. Let me think about this for a minute. Okay, after looking at this, there just really aren't enough good options. And even though we would take a loss if we sell him right now, this industry is going to decline further. So in order to make a profit here, we've got to wait a while. And I just as soon sell it off for what we can now, and we'll come back and re-enter this industry after it's bottomed out. So what I'm going to do is I'm going to have Mitsubishi sell his stake in Sony PlayStation. And When we come back to that industry, we'll buy something else. Okay, so now we're going to move on to hotels and casinos. We've got 3 companies there. Las Vegas Sands, Park Place, I think it's called, and Sheridan. And they're all owned by the bank. We're going to buy them all, merge them, put them all together into one, and add anything to it that we can. Let's see who we want to give it to. Just whoever has the most money is going to get it, and that is Mitsui. So let's go over to him. Make sure that we have enough spots here. Ooh, he's got a lot of stocks. That's 9, 10, 11, 12. We've got enough room, but this is going to be the last one we put in his portfolio. The rest are any others are going to go under Tokyo. All right, so first of all, let's buy these 3 away from the bank. And now we need to see which one has the best management to make them the parent. Las Vegas Sands is reasonably competent. Sheraton is mediocre. And Park Place is grossly incompetent. So let's make Las Vegas Sands the parent. We'll give the other 2 to Las Vegas Sands. Let's liquidate these 2. All right, we got $4 billion in debt, and we got a whole bunch of these we can buy. So let's start adding them up. If we add those 2, it's another 16% for 21. This one for 22. We could buy Hilton too if we want to get all the way up to 40. He's losing money right now. Very incompetent too. A lot of debt. And our interest rate went back up. Okay, growth here is 4%. The industry is deteriorating because of Holiday Inn here. How much is he worth? He's only worth $6 billion plus $12 billion, so 18 altogether. Let's do it. Let's do it. We'll buy him and we'll grow negative. We'll still make Las Vegas Sands the parent, though. Now we're probably mediocre or worse. We're very incompetent. So let's pay off our loan. Change our growth rate to -10. Let's set our dividend to $1. And as far as R&D goes, we'll make it 11%. We'll bring our returns down all the way almost to 0. We're only 23%. Let's buy these other 2 also. All options on HeartMax have been settled as it's now a private company. Somebody bought the outstanding stock of HeartMax. That's unfortunate. Alright, let's pay off the majority of our loan here. Alright, income's going to go way up. Our management is mediocre. Let's change our R&D to 11%. We'll cancel our swaps. Alright, we've got another notice about GE suing for 80 billion, settling for 4. I am again going to say no, because I want to know just how often is this going to happen? Was that last time a fluke or not? Alright, no damages, which is what I expected last time. Alright, let's see what market share we have. We're up to 40% now. Can't buy him because he's owned. So we can buy Trump for 40%. He's losing money right now. Oh, he's super small. Let's not bother. Okay, so Las Vegas Sands, we're mediocre. Income's going way up. We're growing negative right now, which is fine. We don't have any options or anything, and very little loan, and as we grow negative, we can pay that off. Alright, so I'm just going to delete these other two off our list. And now we're up to 40%. Alright. Since it's in March, I'm going to go over to the bank. I think probably ought to double check these and make sure we don't have swaps. Let's go to General Mills. He doesn't have any. Okay, so let's go over to the bank and see what his income is supposed to be from swaps. Oh, they haven't started. They don't get. I guess they don't start till April 1st. Okay, so we got a little more time. Let's do. We just got a couple of days. Let's just do one more. iOmega. He's in the peripherals industry, and we got some stuff to consolidate there. Income's going up. And we are trading below our price. So we can pick up Tattoo here, which I think is Tatung. We can also get Seagate if we want to. Tatung is worth less than $1 billion. And we've got all kinds of cash because we cashed in those options. His price just went up. So maybe it's time that we started growing here. All these end of the month earnings reports. All right, Hagemeyer had a R&D discovery. That's good. His earnings were negative, though. All right, so finally, here it is. Income was down last quarter, should go up for the next quarter, and we're reasonably confident. Plus, we took a lot of excess extraordinary income. Look at that, our stock's up. No, this one's only 3%. So we are reasonably confident. Let's increase this to 13. we'll increase our growth rate, but only to 1%. And the dividend's fine. We don't have options on anybody anymore, so we don't have to grow negative. So let's get back to very capable status. And so this will have a detrimental effect on our income, but we're not really concerned about that right now. Our main concern is to basically take money away from all of our competitors. All right, so was there anybody that we owned in there? I think we already did size systems. Is there nobody else? I guess not. That's it. It's the only one. Okay, so we can delete size systems. And we're not quite to April 1st, so let's take care of GE Appliances. Earnings are going down. Not a lot of stocks we can buy, but we have a pretty big market share already. Okay, so our return is negative. We're reasonably competent. We can bring this down to 10%. Growing at -4 is fine. Got enough cash that we can increase our dividend. So our dividend will be $1.30. Our growth rate we'll leave alone at -4, and we'll lower the R&D to 10%. And we'll hold off buying anybody here because these returns are just too low. If he was trading above his price, I might even consider selling him off. Still March 31st, so we'll take care of the shipping industry, which is these two. Alexander and Baldwin. He's negative and continuing to be negative. And these guys are real small. The whole shipping industry is real small. But it is ready to be taken over. That's 35% of the industry right there. Plus these two would be 36, 37, or I guess what? Yeah, 37. And we could add this one too for 48. Why not? I mean, we just buy them all and grow negative. Improve the returns. Okay, so now we need Tokyo. We've got plenty of money. We're going to buy Alex, VSVE, and OSG to start with. We're going to give $30 billion to OSG and also the other two stocks. Alright, now let's buy this one and merge him in if he's not owned. Oh, he's owned. Alright, so let's get those other ones then. Yes, this one right here is fine. American President Lines, I think it is. All right, let's pay off the bonds and pay off the loan. All right, we got 35%. Let's add this one. That'll give us 44. And we can grow negative. Again, buy back the bonds, pay off the loan. All right, we know we're going to grow at -10. We are somewhat mediocre. So we'll have our R&D be 8%. And we'll give him a... let's see, how much do we want to give the dividend? We've got a lot of excess cash, so let's make it 2%. So we'll make it $7. Let's split him. And let's cancel any swaps that we have. Now our income is supposed to go up. We're growing at a negative, and it says we have some futures, so let's take a look. Looks like we have bought futures, and we're losing money, but the price will go up, so we're going to hang on to those. Let's see if we have any physical commodities. It does not. And he has no options either, so I think we're good. We're all done with this one. Alright, so we replace this with OSG. Oh my god, it's still March 31st. When will April get here? Alright, let's look at Burlington Industries. His income is up. I think we looked at him recently. Just got him really. He's trading it under his market price. Reasonably competent, spending 8%. Income's going up. This one's in textiles. Okay, so we picked up Benetton, so we need to fold him into the fold him in here. Wow, we can pick up WSPT too and grow negative. Why are we growing at 12%? We don't want to do that. Alright, so let's see. He doesn't have any cash. He's owned by the bank. Let's have the bank give him $3 billion. So we need a little bit more money here, but we're going to grow negative anyway, so I guess we'll just pay it down ourselves. And looks like we've got some commodities. Stock index, which is on the way back up, and we have it sold short. Let's cover that. And we have oil that we have bought, making a profit on it right now, and we're going to make more, so we'll just hold on to it. So let's put over here that he has oil. Okay, so let's buy back the bonds and then put the rest toward the loan. All right, we're going to grow at a -10. And we'll give ourselves a $1 dividend for now. R&D looks good. So we'll just change the dividend and we're done. And we now have 34.6. Deleted Benetton. Okay, so Mitsubishi is next. His income is down. He's in bookstores, which is kind of a pitiful industry to begin with. He's grossly incompetent and only spending 3% on R&D. That could be why. And he's got some stock of Firestone that he's losing money on. We can pick up Books A Million or whatever this is. Daewoo is awful low. Look at that. And Bookworm. These guys are all growing negative, so much of, well, we already know how much he's almost wholly owned. So, okay, Bookmart, 100% unowned. Let's grab that. See what Daewoo is all about. Okay, so he originally had stocks, but he sold them all off. Let's buy him and merge him in. Okay, now this one. I'd like to get B. Dalton, but he's majority owned by Barnes & Noble. Barnes & Noble is trading too high, 200%. Let's see what he's worth. Only 12. Never mind then, we'll just buy him. We'll buy him, that's not a problem. 200 million? Dude. That's not exactly what you'd call a loss. Okay, and now we'll buy the remainder of B. Dalton. And liquidate him. Now we have a 38% market share. Take a look at Sumitomo too. We've still got stock in subsidiaries though, so we'll leave that one alone. Alright, let's buy back our bonds, pay off our debt, and then we'll look at the options and futures. Alright, let's change banks first. Alright, so let's grow at -6. Let's make our R&D 16. Give ourselves a 40-cent dividend. And I think we'll leave it at that. Okay, let's look at the futures. We've sold the stock index short and it's on the rise. Let's cover all these. Don't have any options. We got unamortized goodwill and then Firestone. We don't own a controlling interest, I don't think, or maybe we do. Nope, we don't. So since we would take a loss to sell that off, we'll just hang on to it for now and hope that it recovers with the interest rate going down. Okay, so we're done with him, and it's still March 31st. What the heck's going on? All right, let's look at Monarch Machine Tool. He's negative and still negative. Super small. Almost worthless. And we could buy Daifuku and SMC Corp. And I think this is Research Cottrell. Let's see what would that give us. That's 10, 14, 13, 14%, which is not great. Let's see how big this industry is. He's got 30%. Okay, so there's 36 to 40 billion in here. I don't think I'm going to mess with it. Let's just sell this off. So we picked up a few more here. We got rid of the other paper one that we had. I forget who it was. But we sold it off. I think we're just going to do that the same with this one. And Broadway Stores. We have A and P in there, so we're going to sell that. And then, or maybe it's Dayton Hudson. And then Ryder System, I don't know what they're in. Trucking. We'll just get rid of that too. So what we're going to do is we're going to give 20% of those three stocks to Burlington. And then we'll sell them off. All right, let's take a look at NEC. What's the deal? He's a holding company now? Well, he's got his cash and loan. All right, let's pay off the loan. And let's see. I don't think we really want to do anything with him. I think what we'll do is we'll hold him in reserve for when we have an industry that we're ready to sell off our company, but there's no well-priced members of the industry in there to replace it with. We'll just grab NEC Peripherals and we'll give him money and have him buy new assets. And it's still March 1st, so we sold off MMO. And we still have Berkshire, and I guess I should insert NEC Peripherals. And was there somebody else we owned? No, we already got Burlington up here. These are still holding steady in the Ford 350 to 4 range. Gold went down to 1,000, but is going back up again. And the rest of these, not much doing. Index is going up though, so that's good. Alright, so what are we going to do now? One last thing I think I need to do while we're still waiting for April to roll around is I need to make sure that they don't have any swaps that we need to cancel. So let's go to OSG. Okay, Burlington. Mitsubishi. And I don't think NEC would have one, but I'll just double check. I guess what we're going to do is we're going to turn on the ticker, let April 1st roll around. More lawsuits for GE. Here we go, April 1st. And let's go to the bank. Alright, so now we're being shown the income or the loss for our various swaps. So we're making money on the long ones. And we're losing money on some of the short ones, not all of the short ones. And down at the bottom, it gives us a total 179 billion. And that's assuming that the interest rate doesn't change. Right now it's at 6.09 for the short bond. So as that goes up or down, these numbers will change, and it's not until June the 30th that we'll know the precise amount that we're going to make. So we've been going for a long time now, and while I would like to go some more, we are basically out of time. I would like to start making some money on our commodities. That's the only thing that I wasn't able to accomplish today that I really would like to. But hopefully we'll get some movement on those next time. And I hope you'll come back and join me for that. So that's it for today. Thanks for joining me. I hope you enjoyed it. If you did, please like and share. And until next time, this is RakeM saying, have a good one.